Hi, and welcome to CMS Forex News. My name is Christina Robinson, and today is Monday, April 14, 2008. In the G7 meeting, finance ministers showed concern over sharp fluctuations in global currencies and said that they will continue to take appropriate actions, individually and collectively, in order to secure stability and growth in the economies. The G7 meeting gave hopes that the ECB will intervene to prevent further dollar weakness. This market sentiment was reflected by the Euro-US dollar pair's large gap and drop in the opening hours of this week's session. The G7 statement's impact faded quickly as the pair returned to last Friday's market close by 2 p.m. Eastern Time. Traders realized that a coordinated effort will have to be led by interest rate cuts by the ECB, which seems unlikely. Until the ECB moves to cut rates, it will be hard to reverse current dollar weakness. Better than expected industrial production data also helped to boost the euro. In other fundamental news, New Zealand retail sales showed a 0.7% decline in February. Consumers scaled back their spending as they are feeling the effects of rising food and gas prices and record high interest rates. In the U.S., retail sales surprised on the upside, increasing 0.2% on the month. However, most of these gains were due to a rise of gas purchased at gas stations. The data does not filter out inflation, meaning price increases and not volume were the culprit here. Core retail sales, which exclude vehicles, saw an increase of 0.1%. As we saw against the euro, the dollar gained across the board at the very beginning of this week's session on Sunday, but ended up giving away those gains. The New Zealand dollar-US dollar pair, however, failed to close the gap and was instead 50 pips lower than its Friday's close by 2 p.m. Eastern Time. The poor retail sales figures pressured the Kiwi, while U.S. data was slightly better than expected. Earlier in the UK, data showed the annual prices of producer inputs surging to 20.6%. It's the fastest rate since records began in 1986 and is being led by higher fuel costs for the production process. The monthly rate increased to 1.8%, in line with expectations. Output prices for all manufactured prices rose 0.9% month over month. Again, this reflected rises in petroleum prices. On the year, output inflation was 6.2% higher than forecasted and is the highest since 1991. The pound strengthened on the higher than expected producer inflation. From a low in Sunday afternoon trading, the pair climbed to touch 1.9895, a rally of more than 200 pips. In New York trading, the dollar recovered and had pared those gains by about half. Risk appetite was up during the European trading session. The pound-yen pair rose 200 pips before turning south starting at 11 a.m. Eastern Time. Wachovya's posting of its losses hit the market in the morning and worked against risk appetite. Tonight, New Zealand will reveal consumer price data for the first quarter. The UK will post its RICS house price balance and BRC retail sales data in the evening, and will follow that with consumer inflation data overnight. The Eurozone and Germany will post the ZEW measures of economic sentiment. Tomorrow morning, the U.S. has a busy day with producer inflation data, the Empire Manufacturing Index, Treasury flows, and a measure of the housing market. And that completes today's Forex News. Join us again tomorrow right here at CMSFX.com.